I'm Mary Beth Seawald, President and CEO of the Vegas Chamber. It is my pleasure today to highlight one of our President's Club members at the Vegas Chamber, Hightower, Las Vegas. I'm joined by three guests today who are the managing directors and partners of Hightower, Las Vegas. We have Hugh Anderson and Adam Thurgood. Also with us today is the Director of Research, Ms. Raina Penilova. Thank you guys all so much for being with us today.
Thanks for having us.
Well, we appreciate it very much. We know that, Hugh, you bring so many years of financial experience to the financial services industry. You are also very involved in the community here in Las Vegas and the entire state of Nevada, and you're also a proud Chamber Board trustee. So with that knowledge and all of your 42 years of experience in the financial services industry, talk to us about Hightower.
Really comes down to the three P's: passion, process, and perspective. We pride ourselves on the fact that we are financial services geeks. We live and breathe this stuff, not only in the office, but out of the office. It's a 24/7 mental job, and we truly enjoy it. We're passionate about everything we think about. The wealth management process is truly a process. Now, you as someone who flies, you recognize you have to walk around the plane, and then you do your checklist when you're in the cockpit. We do the very same thing. And we find that it's when people recognize that there is a process to the wealth management approach, they are going to get better results. And finally, is perspective. As I said, we are deep thinkers about everything from the macro economy to individual securities and all the things that can affect the outcomes for our clients and their financial plans as well as their portfolios. And so we're really enthusiastic about that entire scope of service.
Oh, and Adam, your role at Hightower is focused mainly on managing client portfolios. You also lead the team in strategy development. We know that Hightower uses a couple of planning tools called Your GPS and the Navigator. Adam, tell us a little bit about these two tools.
Your GPS is really our process for what we do from a nuts to bolts approach. It takes clients through the process of the data gathering, the understanding what's important to them. Everybody has different wants and desires. And what we find most frequently is, we're dealing with wealthy people that have a lot of assets over their lifetime of work, and they love to work, most of them. And so it's not really so much about retirement, it's about finding that work optional lifestyle. And so the Your GPS process is really designed to help understand what that looks like for each individual person, and then take them through the goals, the progress, and the success. And that's really how we integrate all the different pieces of the wealth management process, from financial planning to retirement planning to wealth management to investment management, and so on and so forth. The Navigator is a relatively new tool that we developed that is based on personality trait data. So we've leveraged a company that gives us information on someone's personality. Clients take surveys that provide this information, and then our internal algorithm spits out how they would prefer to be treated and how they would prefer to be serviced, from everything from the level of detail in our reporting to the communication frequency, the style of communication, and how they think. And what we found is that it's a really unique process that we don't find our competitors doing, and it's quite a fun experience to take clients through it.
And so, Adam, what I'm hearing you say is that at Hightower Las Vegas, you really take a hyper-customized approach to servicing your clients.
Yeah, absolutely. Everyone wants to be treated the way that they want to be treated, and most people have a unique set of skills and abilities and nuances that make them different from someone else. And what we're trying to do, especially with the Navigator, is identify what those unique aspects are without having to have someone explain it to us in detail.
Okay.
The difference is off the rack versus bespoke. Simple as that. We want that person to feel like they are getting the exact measurements for what they need to be successful from point A to point B.
Well, and that truly is important, especially in this day and age, where people really would prefer to have the customized approach because, and you talk about size of wealth, right? For example, everybody has a different financial picture and portfolio, so it's important to be customized.
And it's also important to have a clear process to take people through that and create that customization so it could be repeated. And if people need to change advisors for whatever reason down the road, then they could have the same experience and know what to expect.
Well, and Reina, on that note, your background is in finance, coupled with a lot of research skills, and so your interpretation of the financial data and financial positions is so incredibly important to the customers of Hightower Las Vegas. So, how do you analyze companies in these kinds of environments in this day and age, when we've had a certain type of environment, a bullish market, for example? You cannot necessarily judge the future by what's happened in the past. So how does your skill set come into play for clients of Hightower Las Vegas?
Now when we see risks on the horizon, everybody's looking for that active management, for more risk mitigation, and that's exactly what we provide. We always start with the big picture, looking at a lot of macroeconomic research, and we have 3 members in our portfolio management team. Each of us reads extensively in different areas too. Then we come together and decide what needs to change in the portfolios, how the process needs to evolve. So over the years, it's become quite complicated, but for a good reason. And also, we can see the benefit now with markets being tumultuous. Our clients really feel the difference. They give up a little bit of upside when markets are going straight up, but it's really important to mitigate the downside. When you lose, losses really matter more than gains over time, since when you lose, you kind of need to make double the amount of gains to reclaim your position. And in addition to that, when you have your financial advisor, you don't want to lose a big part of your portfolio right away. You really want to feel more secured. So then when you lose less, when the markets are down, then you're less likely to really sell at the wrong moment.
We've had a fairly persistent rising market for many years, and one of the styles of investing has been passive, and that works. In a rising, consistently rising market, passive investing works. But when the market becomes more volatile and more challenging and less clear, as Reina pointed out, then passive doesn't work, because what went up will come down with no fundamental rule to it, because as those vehicles are sold by the investing public out of fear, perfectly good investments that are contained therein are going to be sold off as well. And so our goal is to make sure that we assemble a portfolio of securities that stand on their own merit.
And so, Hugh, I would say at Hightower Las Vegas, your approach really flies in the face of traditional investing, and I would say is so much more customized, but also your financial planning and investment management is all under one roof. Why is that better?
Adam, take that, because I could talk all day on that subject.
Well, for one, you get to have real experience with the people that are making the decisions. Now, if you invest in a mutual fund or some other type of investment product, you are not going to be able, on a push of a button, to call up the office and talk to someone that's making the decisions. And we think that that gives clients a better understanding of what's going on, and also better access in case they have more detailed questions. But really, when you're combining the risk management component that Reina talked about with the wealth management component of people trying to realize their goals, that's a very powerful combination. And it's powerful because most of the people that we work with are wealthy. They've already amassed some money. They are trying to achieve goals that are not so much in terms of massively growing the size of their portfolio, but realizing some life goals that have been developed, over the years. And when you can have both sets of processes in-house, the risk management and the financial planning, wealth management, it ties together more seamlessly.
During the tech bubble, one of the popular modes of investing was farming out the portfolio management process to quote unquote institutional managers, very big brand name firms with cachet who did a very good job. But when the tech bubble came along and the markets went down pretty vigorously for a number of years, most clients of wealth said, you know what? I'd rather be able to look the person in the eye who's making the investment decisions rather than have to pick up a phone and talk to a faceless, nameless voice.
That face-to-face time, and that gives people a lot of confidence, and that plays a huge role as well.
Exactly. And I always compare it to a race car driver. Most Formula One or NASCAR drivers know the mechanics that's going on under the hood, but they're not the mechanics. We have the mechanics. Our team is built to have the drivers and the engineers and designers on the team ready to perform on behalf of our clients, as well as to respond to our clients when they have questions.
Mm-hmm. Yeah, and what I'd like to add is that we really work as a team. When 2020 hit, obviously we had a big recession and a big downdraft in markets, but the economy was already slowing at the end of 2019. And through our communication with our advisors, they were already calling their clients at the end of 2019 or throughout it, and talking to the clients that they thought maybe should take their risk level down a little bit and adjust. So this is something that can only happen when you have the portfolio management in-house. For example, let's think of the financial crisis, Lehman Brothers going down, Bear Stearns going down, and then you have a financial advisor that is giving the money to somebody else to manage. Well, that financial advisor, if they don't know enough, if they don't have a view of the markets well enough, maybe is going to disregard this as just a regular garden variety correction and not make any changes for their clients, right? But when you have the portfolio management in-house, your portfolio managers are going to tell you, well, this is really looking serious. We should make changes for your clients. Make sure that they have more cash, or don't invest new money all at once. Put it in the market slowly. Those are all things that you can do when we're working together. So I think it really adds value when it really most matters too.
And that emphasizes a very important point. That's why we don't sell product. We know why our portfolios are going up and down. We know who the culprits are and who the heroes are in the portfolio. We don't have to pick up a phone and call an 800 number and ask to speak to somebody to find out why Fund A or Fund B did what it did today. I can walk across the room and talk to Raina right away and find out what happened to this particular portfolio position. Was there a new report? Did you sit on the conference call? And she can real time tell me what she heard, why she heard it, and what we're going to be thinking about it in the days to come.
Adam, I know that traditional portfolio construction is really facing a lot of challenges, and there are a lot of changes in the global markets. Share your perspective on this, and what is Hightower's approach to the Defender portfolio?
Yeah, the Defender portfolio was a long process of research and deep dives to try and understand how we could fix some of the problems that we see in the fixed income markets with respect to our clients' asset allocations. It's traditional to have a 50-50 stock bond mix or a 60-40 stock bond mix. The problem today is that the bond portion is not giving you a lot of the benefits that it used to. In the past, interest rates were higher, and when the economic activity of the world slowed down, interest rates would tend to fall. Bond prices are inversely correlated to rates, so that would mean your bonds are going up when the stocks are struggling because of poor economic activity. Today, that's not the case. We have interest rates that are so low that it's really hard for them to replicate what they've done over the past 40 years. In addition to that, you're just not being paid much to hold them anymore. And with inflation running hotter than it has, you're actually earning a negative rate of return on bonds in a lot of different ways. So we were trying to figure out a solution that would allow our clients to still meet their planning objectives without having to take on enormous new volatility by moving out of fixed income into something like stocks. And so we've done quite a bit of work on this, and through a variety of different pieces of research that we found, we built what we call the Defender portfolio. It's a different way to allocate assets. It has meaningful exposure to things like gold and commodities and volatility hedging that helps it weather all sorts of different economic environments and market environments to help produce a portfolio that has a similar risk-return structure as, say, a 50-50 stock bond portfolio, but in a fashion that we believe will work going forward.
And Raina, I know that Hightower offers another type of portfolio called the Aggressor Portfolio. Talk to us about that.
So after developing the Defender, we realized that clients really need something to complement it. something to create a more complete offering for those that seek a little bit more risk than just the regular 50-50 bond portfolio equivalent. And that was the Aggressor. So it's actually a more aggressive way to approach the markets. It's anchored by our large cap core quality driven portfolio. And then it's complemented by some tactical bets on some special situation ideas and disruptive innovation in the meaningful size of the portfolio. So when you combine the diversification that the Defender provides with the Aggressor, you could really arrive at the same mix as, let's say, a 35 and 65 mix of bonds and equities, or the same kind of risk level, but in a little different way that would work in inflationary periods as well. And also disruptive innovation, of course, we're in the precipice of innovation being so ubiquitous and new discoveries in several different areas. So it would be great to really have exposure to those over time.
The world's changing fast, whether it's technology, genomics, you name it. Having some exposure to those revolutionary technologies can be incredibly important, but it's a tricky environment because valuations don't look like normal valuations, and there's a lot of sentiment that goes into it, whether it's positive or negative. So having a deep dive in that disruptive innovation space helps us to have the portfolio exposed to what we think are asymmetric possibilities, where the gains are much larger than the potential losses, but to do it in a very wise and thoughtful way.
And Reina, I know you have a term called ESG that you utilize in the Aggressor and other portfolios. Talk to us about ESG, what that means, and why it's important.
Yes. It's environmental, social, and governance investing. So it's investing in companies that are environmentally friendly, socially responsible, and have quality governance at the corporate level.
How we approach things is always a little bit different. So I'll give you an example. For most people, investing in oil majors is not really compatible with ESG. But few people actually know that European oil majors are the biggest investors in renewable energy. They want to be relevant in 50 years from now. They don't really want to go out of business. So in fact, if you want to invest in something that is really developing that space in one of these companies, then you should be investing in oil companies. And that has some other added benefits that we saw coming in 2020 when oil prices went negative, and there was pressure from the public of having more renewable energy, coupled with political pressure, coupled with less money for those companies. We saw that really there was underinvestment in that space, and that we could see some oil shortages. And that's why we really made this into a meaningful overweight in our portfolios. And now we see oil prices where they are. Those companies have benefited in their stock prices.
And as Reina alluded to, ESG is a buzzword. And in the world of Wall Street financial products, they slap ESG on anything and call it meets criteria for people who are environmentally, social, and governance sensitive. But when you peel back the envelope, many of those are built to just replicate what the market's doing so they can gain market share. And we don't permit that to occur in our portfolios. We peel back the onion. We make sure that if it's an ESG investment, it qualifies properly. And yes, we may have to explain it to a client who says, why do you own an oil company? Well, here's why we own this particular oil company as compared to this particular one.
We also look at it differently than the normal ESG metrics. For instance, we're big believers in nuclear energy. We think that it's the way that we can get to a clean environment with paying attention to the math. Solar and wind just don't always operate, and you need solid baseload power, and nuclear can provide that. And look, we've had disasters in the past, but that's 40, 50, 60-year-old technology. The nuclear reactors today are far more technologically advanced, far safer, and they can come in different sizes that can be deployed in smaller areas where you don't have to have giant power centers. And so we think that that is a way of the future. Well, you need one type of material to make nuclear work, and that is uranium. And uranium has been undersupplied to the market for about a decade. It's projected to be undersupplied in a massive way going forward. And we're now starting to see political organizations all around the world shifting to be more accepting of nuclear energy. And that will put more demand on an already undersupplied commodity. So we have been investors in uranium looking at ESG in a different way. And finally, we just saw Europe in 2021 add nuclear to their green energy taxonomy. So things are moving in that space, and we think that it's a very interesting long-term tactical play that can give people the peace of mind that they're getting investment exposure to something that will help the planet that not too many people have been paying attention to.
Well, and Hugh, as we continue to see so many changes and so much disruption, as Raina was describing a moment ago, in the global economy, you know, my former life as a journalist, we always ask the question, what's the so what? Why should people feel so much more comfortable and confident engaging with Hightower Las Vegas as opposed to maybe other more traditional types of approaches and firms?
Certainly. Well, I think I'll reiterate the 3 Ps: passion, process, and perspective. And other than buying it, we build it from the ground up. Our portfolios are researched from every security level on up to the point where we assemble the portfolio we think will produce results. The other critical thing is, one of the things that really puts a smile on my face is when a client does call up and says, "You bought uranium?" thinking that it's a bad word, and then 5 minutes later they're educated, as Adam just elaborated. Here are the merits of uranium, not only from an investment perspective, but from a social and environmental perspective. And so the difference between Hightower Las Vegas and some of our competitors is the fact that we are thinking before we are building, and we are building from the ground up rather than buying somebody else's off-the-rack solution.
Okay, anything else you all would like to add to our conversation that our viewers would need to know about?
It's a great place to come to work every day. We enjoy each other's company, we challenge each other, we're not adverse to getting pushback from one another, and we think that develops into a very healthy environment for us to perform and take our process to the next level. Our mission has always been the continual pursuit of managing wealth to a higher standard, and that continual pursuit speaks to the ideal of that mission, and we continue to drive to it every single day.
You know, Adam, with emerging disruptive technologies, a lot of people are very curious about Bitcoin. It still feels new to some people. So what is your approach at Hightower Las Vegas on Bitcoin, and what do you advise your clients?
Yeah, this has been an interesting pathway for us. Unfortunately, I was of the view early that this was nonsense, and I didn't spend the time to go down that rabbit hole to understand it. But a few years ago, I thought, as a fiduciary, I probably should understand Bitcoin, and I'll spend a full day researching it. And what happened is, after 10 hours that day, I spent literally 2 months consuming all sorts of research and information on crypto, Bitcoin, digital assets, and what I came away with was fairly profound. I am a firm believer that there are 2 types of crypto. You have Bitcoin and you have everything else. Bitcoin serves as a digital gold style alternative. It has the properties that make gold what it is today: scarcity, durability, fungibility, portability, and divisibility. And we've actually spent quite a few client meetings talking about this. And so we have indirect exposure to Bitcoin in almost all of our client portfolios. We have for some time. The rest of the crypto space, or the digital asset space, is really interesting. It's evolving extremely quickly. I think that you can view it as sort of an early 1990s tech boom, where that there are going to be some companies or some assets that end up being tremendously valuable down the road. But it's difficult to discern which ones those will be at this point in time. And it's changing so quickly that it's really tough to keep up with. But we do think that there is a parallel financial system that is being built through the likes of layer 1 blockchains and NFTs, and it's something that the public will have integrated more and more into their normal lives as time progresses.
Hugh, we've talked a lot about the features and benefits of Hightower and the things that really set Hightower Las Vegas apart. Talk to us about the fiduciary aspect of the services that you provide at Hightower.
Well, Mary Beth, that's an excellent question. Many people think that when they approach a firm that is going to give them financial advice, that they're going to get the best advice, that they're going to get the advice that's in their best interest, not the other person's. The reality is that many firms operate under different standards, and we won't go into all of those right now, but the standard that we operate under is called the fiduciary standard, and it's a legal obligation on our part to do what's in the best interest of the client or the potential client. Many times, we are not the best solution for a client. We may not be able to cost effectively service the client's needs in the way that they need done, but we will advise them on a better solution than maybe Hightower Las Vegas. That's our obligation. It's not to get them in the door and have them pay fees unsuitably. That being said, if you think about it, many purveyors of financial product will operate within the law. So if you go to a car dealer and you say, I need a car, and you have 9 children in tow, they should be showing you minivans and SUVs, not a 2-seater sports car. But as long as they get that car off the lot, they sold you a car. That's their job. That's not our job. Our job is, again, going back to the bespoke, we are legally obligated to make sure it's a bespoke solution for that client.
And that's one of the reasons why we spend so much time up front in the wealth management, your GPS financial planning process, because we cannot offer you the advice that's in your best interest unless we know what's in your best interest. And that takes time to develop. We're not going to move at a lightning fast pace. And you know, that can be a turnoff to some people, but in our minds, the clients we want are the clients that are going to understand the importance of that and do the deep dive with us.
And Adam, when you say do the deep dive with us and knowing what's in the best interest of the clients, that's where Raina comes in with the processes and the resources, right? And the research. Raina, is that correct?
Yep, absolutely. We read a lot of macroeconomic research to really discern how the market is positioning, what is already in the price, how we think the economy is going to evolve, and what is not yet priced in the markets. And then we combine this with our individual security selection process, which really starts with a quality search. We select the companies that have strong financial statements, strong balance sheets, they are likely to grow, and hopefully that future growth is not yet priced in the markets. So we work to build conviction around our ideas and our individual positions. And we work as a team. We have 3 people on our team currently. We talk about each idea and pull the trigger on the ones where we have consensus.
And going back to the fiduciary standard and the whole wealth management process, as they just elaborated with our process, we're asking clients to invest their time with us before they invest their money. Because we feel that if they do that and buy into the concept and are not in a rush to just, here's the check, invest my money, I'm out of here, we won't permit that, because they have to have a vested interest in their own success. And we're going to be the coaches to get them there, but we need to understand what they need and why they need it.
Which is another reason why it's so important that they invest their own time by taking the tests, the risk tolerance tests and things like that, so that you actually know what their needs are, even maybe better than we know ourselves.
Exactly.
If you think about risk tolerance and your ability and willingness to take risk, it's multifaceted. A risk quiz is good. It helps to understand a little bit about what you feel in terms of risk. Our Navigator process also gives us a view into how you think about risk, but that's one piece of it. The ability to take risk is determined by all sorts of different things: your investment experience, your time horizon, your liquidity needs, how you have built your wealth, and a variety of other factors. And that's the more of the art of the process, to understand how to combine the willingness and ability to take risk to make sure you're in a strategy that will be on track to help you meet your goals, but will not break below that point where you just can't handle it anymore. If we have put you in a portfolio where it's just a little bit too risky and there's a bad market outcome and it crosses that line where you can't handle it anymore, that's when really bad decisions are made. So we do a lot of work to make sure that we are putting you in something that is prudent and that won't pass your emotional break point.
And the consummate risk taker is an entrepreneur. They're the ones who get paid last. They're the ones who sign the front of the check. They're the ones who have to deal with everything. When they ultimately sell that business and hand that life's work over to a financial intermediary, Then it goes into the big black box that they really don't control anymore. And that's a completely different risk profile than the entrepreneur who is willing to take enormous risks to build their wealth in the first place. Now that they lack the control to drive the bus in terms of the operations of the business, we have to make sure we understand that transition, and they understand that, because that person is going to be a very tentative investor to start. And if we have a bad time of it in the initial phases and we haven't calibrated properly, we're going to hurt that client. And we want to make sure that never happens.
All right. Well, Hugh, Anderson, Raina, Adam, thank you guys so much for being with us today. We appreciate you being great Vegas Chamber members as well. Thank you for being with us today.
Thank you for having us.
All right. And if you'd like to find out more about Hightower Las Vegas, you can go to hightowerlasvegas.com. Thanks for joining us. I'm Mary Beth Seawald at the Vegas Chamber.